Hey, good morning traders, Mark here from Trade and Train. Just a quick update on our midweek market recap. So basically just going to have a quick look at some of the watch list charts we put out on Monday, see how they've come into fruition and what potential opportunities we've got from there. So we started with the dollar index on Monday, and we were basically just looking at the structure that was broken. The market had come out, created a new high, and was selling off quite nicely into our support, where we were then looking to see if we get some dollar buyers come into the frame. Yesterday, Donald Trump, around sort of 8 p.m, announced that he was no longer going to talk or discuss stimulus packages with the Democrats. We then saw an initial sell-off in the stock market, which resulted in a monetary flow to safe havens, US dollar and Japanese yen. You can see the big bullish buyer candle here on the dollar index. That was basically an instant move on the back of his announcement. However, this is something we were expecting technically, and we still do expect to see this market continue with seasonal bias to the upside. So what's changed and why are we seeing a little bit of a sell-off? Well, a few hours later, he also released another tweet which was basically insisting that he will release $1,200 checks to the people of America, but won't discuss any further stimulus. That's resulted in the stock markets bouncing back. We've seen a little bit of money flow back out of the US dollar. However, I don't expect this to be sustained unless there was some further stimulus for corporate aid, etc., which, you know, when we're talking just $1,200 per person, it's not quite the 2.2 trillion that the Democrats were after. So let's take a look at the technical charts on the back of that. So when we looked at the dollar index, we noticed that there was a break of structure and then a retest, and then if we then look at the euro, we can see it's got the same pattern. So we've got this move here where we can see we've got these higher highs, higher lows, but then it starts to fade, and that's within this corrective pattern at major structure. We finally break out, we create a new low, and then we come back up into test those highs. Now the market has produced slightly more corrective move than we initially thought, because we were looking at price testing the 1.1750. We had a little pierce through, but it did come back to the underside of this ascending trend line, and then sellers came back in. Now if we just drop down to the hourly chart, you'll see that it's formed a nice corrective pattern here, where we've had three, then the fourth attempt here, we've sold back off into support, and then the market has come back to test that magic number 1.1750, which is where we're basically expecting the market to then sell from. So you've got options here, traders. You can be looking at shorts here, or you can be a little bit more conservative and wait for the market to break these swing lows in this little zone here. So looking for the market to sell off and then look for a lower high. My option where I'm looking to get short is I'm looking to be a little bit more aggressive. I'll be looking to get short in here. Another market we looked at was Euro Yen. Just going to go up to the higher time frame. So again, we highlighted structure over here to the left, the head and shoulders formation. Once this trend line support had been broken, then we broke the neckline, and prices rallied in a very what's the best way? It's more of a corrective manner than a very strong impulsive manner. So impulsive would be something like this strong move here. Here it's nice and sort of controlled and cyclical. So still expecting some downside. We've come back into our reversal zone highlighted. The conservative entry here would be waiting for your counter trend line to break, and then looking for at least that 122.50 as next stops, potentially 120, and maybe even down as low as 114. But as it stands, we need to see a little bit more confirmation from this chart before we get involved. Something for you to look at today that is setting up currently right now is Aussie dollar for an additional trade. So our members are already short this market. We've already been involved. Some of our members actually closed profits last night on that big impulsive candle. You know, because it's rare that you get a huge impulsive candle and then the market continues to go. especially when it's just off a tweet. So some of them did close out on these moves and took a nice little 2% trade. Others will be holding and will be looking to add into this trade. So what we're seeing the risk currencies potentially taking a little bit of a beating through this seasonal period of dollar strength. And we'll be looking to see this market potentially test 6,800 as a sort of maximum move lower, but initially sort of that 7,000 before we see the seasonal strength kick in on your precious metals and even the likes of Aussie dollar towards mid-late of November. As it stands, if we just drop down to the hourly time frame here, you'll see that the market has broken structure, i.e. we had a lovely double top formation where you can see left, right, and then the neckline. The market's broken through that, nice clean break. We've had a solid pullback and corrective move into structure neckline, and we'll now be looking for opportunities to sell this market in line with our US dollar seasonal strength. Another market that is potentially setting up very similar to that is the Kiwi. This is something we did cover on Monday. We highlighted looking at this opportunity through here, which was the daily double top neckline, the market coming in, and then we got a smaller time frame double top through here. We broke through, solid close below the counter trend line. Now we're seeing a pullback into this zone anywhere through sort of 66.16 to 6600. We'll be looking for opportunities to get short, initial targets down to 65.10, and then you've got a nice drop all the way down to 6,400, 63.80, depending how far you want to potentially run these trades. Remember, it's all going to have to be done via controlled risk management. What other trade would I potentially like to show you today? We'll take a quick look at gold, because I do get messaged about gold quite a bit. So options with gold, it is a seasonal bear period. I'm just going to remove these here right now. So if we look at what's happened with gold, you can see you've had that strong impulsive move up, strong impulsive little correction here when the market sold off, and then we've seen this market just soften slightly, lower highs, flat level. We've broken through, we've tested the structure low here, then we've had a nice pullback into structure, and then we're selling off again. So I will be looking for further shorts on gold, at least back down towards 1850, and then I'll be seeing where we are at the time of month and where we are in terms of seasonal move. If price gets down towards 1850 relatively quickly, we might find that we could have a further drop on this before we see that seasonal bullish period kick in, as I say, towards end of November, early December. But as it stands right now, we'll be looking for shorting opportunities on gold. Potentially we can look for a nice cycle lower and a lower high on a 15-minute, and then we'll be in and targeting those 1850s. So a nice $40 up for grabs there. Alright guys, that's our midweek market update. Should you have any questions or wish to get involved, you can either drop us a direct message at mark@tradeandtrain.com or leave a comment below the video, and we'll be answering your questions as soon as possible. If you did like the content, please remember to hit like, share and subscribe. We'll look forward to seeing you in our video tomorrow. Have a great day. Bye bye.